From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
Hi, I'm Jim Lineweaver, your financial quarterback since 1993. At this time of the year, we like to recap how the market's done so far this year, but also forecast what we think is going to happen in the second half of the year. So here joining me is Jerry Herman. He's a chartered financial analyst and also part of our investment committee. So Jerry, how's the first half of the year shaped up?
Well, Jim, it's been very volatile, but a very resilient year. The market was up about 5% through February and then took a sharp downturn into April, bottoming around April 8th. But since then, we've reached new highs.
Yeah, the investment committee did a great job because we had a nice run up through the end of last year and you were able to take some profits in January and then reallocate that to the dips in the market that we saw in April. We also had a lot of communication with our clients that really helped.
Yeah, and there were things that drove the market down. For example, inflation ran hotter than expected in the first quarter. The Fed revised their guidance, lowering the likelihood of interest rate cuts that were anticipated. Geopolitical tensions between Israel and Iran came into play, and proposed tariffs also created uncertainty. In fact, around Liberation Day, the market lost $2 trillion in value.
Well, that's a lot. But beside these challenges, the market's really turned around to a rebound to an all-time high, hasn't it?
Yeah, and there's factors contributing to that as well. Corporate earnings continue to be strong. They were up 13% in the first quarter. Tensions in Israel and Iran have also eased a bit. We have seen that the tariffs discussions have come along a bit. Investors are a little bit less worried about watching the Fed, given the fact that the economy is pretty strong. And we also had the tax bill signed into law, which extends tax cuts as well as having some other favorable policies.
Yeah, and although it's true that many of the worst case fears haven't really materialized so far, but still we got to be careful because the volatility tends to spike this fall, specifically in October. We usually find that this month has more volatility than any other month of the year, according to a 1950 study from LPL Financial. So looking forward to what do you expect in the second half of the year?
So we're modestly cautious and optimistic. On the equity side, we continue to favor quality, diversification. We favor the U.S., although we have made some changes recently there. On the fixed income side, yields are still very attractive, some calling it a generational opportunity to lock in income. And for the rest of the year, we'll focus on tariffs, inflation, economic growth, as well as long-term trends like artificial intelligence and U.S. debt.
Yeah, Jerry, your insights are truly highlight the dedication and expertise that you and the investment committee bring to our clients. As we navigate this unpredictable year, we're proactively adjusting our strategies to help clients seize opportunities and also mitigate risks. So if you have questions about your portfolio's performance, or if you're wondering whether it's positioned for success in the second half of this year, we're always here to support you. We're always available to help you prepare for what's ahead or simply provide a second opinion, so call us today. Now here's Fox News Sunday.